Good afternoon. This is the Elliott Wave daily update for the S&P 500, being recorded on Wednesday, October the 15th at 1:18 p.m. Pacific Daylight Time. Well, as I often say, we need to allow the market to show us what it's doing. And I can give an estimate, I can give a thought based on the pattern, um, which is why you will always hear me give preferred and alternate. And the reason is because the market could go on a separate little tangent all on its own and be even more confusing than you were the day before. And that's happening now. But I continue to just share with you guys that what we're working with is still a corrective process, a corrective wave. It is a B wave inside of a minute fourth wave coming down. And we're working the B wave portion, which is an upside move. And now it's becoming more clear that it is likely, and I'm pretty sure, because it's all fitting very cleanly at the moment, it's unfolding this minuet B wave, all this right here, in a triangle pattern. So there's going to be five waves, A, B, C, D, and we're in E, five waves. And they're all threes. Every last one of them is threes. But it's going to have an upward bias because it's a B wave moving to the upside. That's the direction that this inside B wave is taking. So there are times, of course, when it could be a B wave to the downside, but this one is a B wave to the upside. Now, I just want to go over this because it hit me today when we ran up and then we tanked. I'm like, okay, so it can't be a B and then one, two, three, four, five for C. That was my original thought. Nope, it came down, broke everything under the sun, drove it down to 66.5150, and then started to take it all back. Now, if you're really looking for like what created these moves, I think this particular one, bringing it down, was the the vice chair of J.P. Morgan really giving his warning of what's going on in the economy and the markets and how they're just really not synced pretty well, considering what's happening in reality in the world and how it's going to affect stocks, how it's going to affect the economy. So he was making that statement that stocks were overvalued. Now, he's not the first one to jump on that train about what's overvalued. Not that I make that claim, but I will say that we're overbought. Same kind of a deal. We're overbought. Now we're more seriously overbought. That all stays true. Now, so that's what kind of started it. But this morning, we were kind of going on the basis that we had Powell, that he finally came out and he started talking, and other people started talking about, well, we might get, a cut next week in the next FOMC meeting. And so now the market once again has cemented that in with a 90% probability that we will get a 25 basis point cut next Wednesday, which is the 22nd. And I believe that meeting is the 21st and 22nd of October. So decision day is that Wednesday. And I could double check that because it should be listed in the U.S. economic calendar. So if I kind of go out and I go to next week, oh, it's telling me that there's none scheduled on the 21st and 22nd. That's interesting because I thought for sure that it would be the Fed. In any case, I still think that's what I heard because I know there is a Fed meeting. In fact, hold on just a second. because I know when I was doing the tails, um, the algorithm was telling me 20th, 20, 21st and 22nd of October. And then the next one after that, there's none in December, excuse me, in November, but then the next one would be in December. And it's kind of in the mid, in the early part. So interesting, interesting. But I'll keep up on that. So again, here we are. Now we're anticipating another rate cut. And so, um, and then JP Morgan bringing it back down because they were rallying the stocks. They, well, guys, we're already overvalued. Now you want to push it to more overvalued. And everybody's trying to jump on that AI train. No matter what the news comes out, okay, that's more positive for them. So they run over. Like we had that in Broadcom. We had that the day before yesterday in Broadcom, and Broadcom just exploded and went to the upside. Then they kind of trimmed it back down. Today, they had it back up. Let's just take a look that it actually only finished the day up $7.20, where the greater portion of the day it was up 20, 15, $20. So they trimmed it all back down again. So again, we're working with a lot of stuff, but here's really what's going on behind that scene. We had, the options are trading like May wheat, so to speak. So there's a lot of purchasing of calls, right? So the dealers got to sell those calls, and what's the hedge that dealers have to buy? They have to buy the underlying, and that then, of course, pushes the price of the stock up, which then in turn pushes the indexes that sits in, pushes the price up. So it's kind of a self-fulfilling prophecy. I've said this before. Now, we had a lot of that going on. We had NVIDIA starting out okay and then getting smacked all the way back down. I think it traded as low as 178. Let me just double check. NVIDIA 177.29. That's the low. After opening this morning, 184.80, getting up to 184.87, then on that downswing we had, got down to set 177.20. In fact, it was NVIDIA that led the charge down. And, and just to kind of put this back into context, because you know what, that's what I try to do. I go over the gamma levels every day, it's in the membership only morning report, but I'll discuss them after the fact, of course. So again, what we saw today, as the market started to come down, it started to break those levels again. It started to break, it had worked its way above, for example, a call wall or above major gamma levels, and then coming back down, it just broke them back again. So it reinstates that. And then just kept going and then started to break volatility triggers were actually down below, but broke them and then really started to roll. That was that final. That was this part of it, just before it stopped and then went and turned and rose up strongly. I can go down to my 15-minute chart and you're going to see it clearer. There it is right there. And then we had a little bit that new low, but they started to buy it right away. So this was breaking through the volatility trigger. And most of the time it's going to be in like the Qs and or the spiders. And so I'd have to go back and look again, but I know one of them, it wasn't in the NQ itself, and I don't think we had it in the SPX, but the SPX first thing this morning rose up above 6,700, which again, I am just going to tell you what that was, because it was important that when it did it and what the reaction was. So let me go back over here, go to the spiders. And what we had at 6,700 was large gamma 1. Large gamma 1, that's the largest gamma position that's going to sit somewhere. Now, it could come in the puts, it could come in the calls. Combination of the two, still large gamma 1. And that was at 6,700 in the SPX. So I guarantee you go over to those SPX options and you're going to find it. You're going to find it at 6,700. And that's why it sat there and why it was so big. So it broke through that. And of course, then went all the way up. In fact, the The high in the ES was 67.66, almost you get 67.67. So we're up there. We are really up there. And then just kind of turned and dropped to the lows, which was 66.51. 67.67 to 66.51. That's a pretty big drop. So goes through a lot. And a lot of it is that it tumbles on itself, forcing those positions to make adjustments, those traders to make adjustments. And then when it's done and somebody starts to buy in again, well, then you're triggering it all back to the other side. So, or all kinds of things can happen. You know, we have a lot of algorithms that they're going to go down. They're going to try to monetize something. If there was a zero DTE, again, dealing with the SPX and zero DTE, we know if you follow anything from some of these major companies that provide levels, there's a gentleman that they call Captain Condor. I'm assuming it's a gentleman, Captain Condor, and he puts on these very large iron condor positions in the zero DTE and SPX. So they could be going after him or her or them. And so there's a lot of interesting things that happen that have nothing to do really with are they bullish or bearish on this or that. It has to do where these options positions are and how things get traded. Now, in this confusion of trying to figure out what is the Elliott on all of this, and it took a while, but I'm feeling a little bit more confident that we're getting towards the end of the B wave. Now, I think we still have a little bit more upside to do. I've got the markers on 67.40, and let me go like this, 67.59 or 67.60, and then they just peak their nose right there at 67.50, that high, and we might just peek over it at 67.68 in the E wave, right? And then that should be it. And I would actually be looking for something very similar to what happened here, but this time I don't think it stops. This time I think we go down if we put the B up here, we go down in that C wave. And I'll put the markers back together once we get that high in, but we'd be looking for, again, below this level, below 65.39. Let me get that right on the nose. Where is that? 65.40. So again, we'd be looking for something below that number. And I think we've had levels where we've got that 64.12. I know I have 64.20 as well as a level. And then we have additional down here. And if I bring this back up and just put it out here, oh, and now I can't even, I got to go out to the daily. Wow. There's the previous fourth. And it's kind of setting up the high end. The previous fourth is at 63.60, 63.71, 72. So we got that 64.12, 64.20, 64.12, 63.72. And then if we really kind of go full bore, we kind of slip and we can come down to that 382. But initially, I'm thinking here down to here could kind of contain it for minute wave 4. Then we begin the rally phase again. And that should hopefully start to build in a nice, I got my fingers crossed, clean impulse structure up. So a 5-wave structure up, complete with the third wave being the longest and the strongest, and wave 1 producing its own 5. And nice, clean, I'm praying for that in our corrections, that they all kind of come in as zigzag, but actually if it were just the rule of alternation, kind of still can be a play there, where if wave 2 is a zigzag, wave 4 would be expected to be a flat or a triangle. And that actually is where they often come in. When we get these flat positions or we get a diagonal or just a triangle pattern, we'll come in at 4th wave position. Okay, so Let's sum it up here. Wave 4 still in motion. I believe we're now finally coming into the closing moves to the minuet B wave. I think we have a top side that we can get to at 67.68. And please, we're going to have to allow, should it get strong, to kind of cruise beyond that level. But I'm not really looking for a whole lot more because we need it to kind of still be a diagonal. But this is kind of getting steep, so we can go right up and it still would be. So, and then once it's complete, I really would be looking for it to begin to thrust up and out of this triangle. And that would say, well, we can always go like this, and I can put this back. Oop. And you can see it just kind of starts to cut up. So we'd be looking for it to come down and break that. And I can put that out a little bit more and you can see it. You can see how steep that gets. So you're going to be able to see how steep it gets if we're coming way out to here, which I'm hoping that we don't. Because we finished the C and got the D was today. And so I'm thinking that in its own, it doesn't go out that far. But you can see that it's angling up pretty steep. So I'm going to go back and shorten that again. Take that off and say okay, and it brings it back down to there. So we can see the triangle pattern. All right, moving averages, by the way, on the daily, look at that. The 8 is flat, the 20 is flat, the 50 is basically flat, and the 200 is lumbering down here below. So there's not a lot of damage being done to the moving averages on the daily chart. We're seeing it more consistent, of course, here, where we're still below the 200. Notice that on the 1 hour, we're below the 200. There's the 200, there's the 20, there's the 50. Oh, the 8's above it. No, 8's below the 200. So, and I'm not looking for this to start really coming off too strongly. So I think it's like we could have, I'll get back down to my 15-minute. I think we can have like, whoop, let me open that up. Like either A, which I think it's be A of E, and we're doing a B of E, and then we do the C. And C should be dynamic, or it's 1, 2 of the A of E. And we're just going to play this out and see how this all unfolds. I'm not going to try to second guess. The market will tell us. All right, so now Thursday. Let's kind of open this up a little bit, bring it in. Okay, Thursday. We already know that we're not going to be getting any economic news. So, yeah, nothing. We should be getting the producer price index. So you can see that's like the market is kind of hungry. The market, like, how are we supposed to really react? We don't know what the producer price index is going to show. We don't know what U.S. retail sales are going to tell us. So we're supposed to trade on this, but how do we know? We don't have the numbers, and we haven't had them for the last 2 weeks. So again, tomorrow, no numbers. But we do have, though, is the Philly Fed Manufacturing Survey. And the Home Builder Confidence Index. And that's it. And again, we have 1, 2, 3, 4, 5. Oh, no, 5. We have only 5. Stefan Miron, who's the newest Fed governor. Boy, they are quoting all of his stuff. He's brand new, and boy, they're filling in that gap about how he feels and what he thinks. And I'm finding it interesting. And so if you get a chance, you can read what the guy's talking about. That's a good conversation. All right, that is going to be it for today. And our next update will be tomorrow morning.